a big honor for me to call on stage Fabienne Herlaut. She's a managing partner of Ecomobilité Ventures. It's a French VC focused 100% on sustainable mobility. And she will be giving now a presentation on her vision about the market. And then we have a couple of startup pitches. And finally, we have a really exciting panel talking about Mobility 2.0, and Fabienne will also be the moderator of the panel. So please welcome on stage Fabienne Herlaut. Thank you very much.
Thank you, Jan. It's a pleasure to be with you this morning. I will do my usual joke. I'm very pleased to see that there are so many ladies in the audience and so many ladies on stage. So it's my privilege probably to be the single or only lady to speak to you today. Now, let me talk to you about ecomobility, or more specifically about the mobility market in the way how we see it. The title of the presentation is a little bit provocative, and it's provocative on design. Titanic or El Dorado? Is it going to drive, is this market going to drive us underneath, or are we going to climb at the top? And this is what I'm going to try and address today, and hope to convince you that we'll go up rather than down. 3 points on my presentation. What is the background of the mobility market? Most of the information I will share with you is already known to you. What is Ecomobility Ventures, the corporate venture fund that I created and that I'm managing today, is doing and offering as a financing proposition to young companies? And finally, what are my beliefs with regard to where the market is going? When you look at the mobility market, this market is facing huge economic challenges. Just a few figures to illustrate that. And these are French figures. I think that you can probably expand them to other countries. 12% of household budget is spent on cars. It is the second most important topic in a household budget. 70 million hours are lost each year to find a parking spot. 80% of our travel time is increased at peak hours. And for those of you who don't already know that, you only use your car 5% of its time. It's less than 1 hour a day. And this hour is costing you 18 euros per day. And you have to compare that to how much it would cost you to rent a car from, let's take Autolib. So an hour of location from Autolib is 9 hours. Having that in mind, and if you combine that with the ecological challenges, transportation represents 25 to 30% of gas emission, total gas emission. The financial or economic crisis in which most of countries are in now, there is really a need for more efficient mobility. And this mobility, I like to call it eco-mobility. Eco like economic or ecologic, it's up to you to decide. And the way I define it is an ecosystem of products, services and technologies to create and propose mobility solutions which are economically efficient and environmentally friendly. It's a little bit like a jargon, what I said here. Now let's try to illustrate what ecomobility is about, and we talk about the ecosystem of ecomobility. I like to use this roue de la fortune, fortune wheel, don't know the English word for that, where you find different areas for ecomobility to grow, develop, and implement. Innovative technology, information technology, to help you pay and get smart ticketing. Connection between vehicles or mobility products to help you be more efficient in the way you drive a car. Sensors, wheels, all that can help. Smart infrastructures, smart metering, parking management, these are the ways to help you be more efficient. And last but not least, all these transport services where you find the shared usage of cars, and this is where you find the carpooling, the car sharing. So sorry for those of you who thought that ecomobility was limited to electric vehicle and car sharing. I think there is much more to it, and this is what makes it an attractive market. Now, the development of ecomobility is made possible for two reasons. The first one is a significant changes in our consumption behaviors. As most of you know, and even in Germany, owning a car is no longer seen as a status symbol. Collaborative consumption is everywhere and is invading or booming in mobility application. And social networks makes it possible to combine mobility and fun. So new consumption behaviors, an explosion of new technologies to facilitate mobility, localization, machine-to-machine, electronic ticketing and payment, identification, real-time information, all that is becoming easy and custom due to new technologies. In this market, which is changing very quickly, as usual, new players are taking opportunity to become actors in this market. You can see now that the historical split between public transport and private car is disappearing. Private car manufacturers are now developing shared mobility solution, and public transportation are now tailoring their services to be more and more customized. New industrial leaders are entering the market. Companies whom you would never have thought of would do it just 10 years ago. Utilities, software, information technology, telecom companies, they are all coming to the market because they believe that this is a huge potential. And of course, when the market is shaking up, this is the ground for startups, and we will have illustration in a minute. This is the ground for startups to come with new ideas, new business models, and continue the shaking up process. So I think it's now easy to say, or it's an evidence that the ecomobility market is no longer a gimmick. It's a real market, and it's a real business. Just a few illustrations of significant deals, because here we have VCs and startup. Car sharing companies or carpooling companies. Carpooling GmbH, German company, made a significant fundraising, I think 3 or 4 months ago, about 10 million euros or 8 million euros based on a very huge valuation. French competitor did about the same, more or less the same amount of money, more or less the same valuation. And we're talking valuation of about 30 to 40 million euros for a company with only 1 million or not even 1 million turnover. And I'm not talking about losses, because losses are above the size of the turnover. So here you have a market, you have a business, and you can go through different statistics. There are usually significant transactions being made on the market. Transaction, startups, VCs, and this is where you come with the Ecomobility Ventures approach. Ecomobility started about a year ago, and when I talk about Ecomobility Ventures, I like to use 2 words: partnership and innovation. Partnership, because this corporate fund, and I don't like the term fund because I don't think it's appropriate, it's more an investment company, came from the idea of building up a partnership between large companies willing to share their expertise on a given market, willing to go beyond traditional vertical boundaries to try and invent new ways of providing smart mobilities, and doing that by leveraging the ideas and the business model brought to the table by young European innovative companies. Three partners of the project are Orange, the French telecom company, Total, the oil manufacturer, and SNCF, the French railroad company. There was one other guy at the startup of the business. It's a car manufacturer called PSA, but PSA runs through too many difficulties and they drop away in the summer. What do we have in terms of what is our approach? 25 million equity, not enough from my point of view. I will tell you why in a second. I left SNCF to create an independent company, so we have 3 professionals running the independent company to manage the fund. And we invest in early stage or cap dev in Europe, and we like to see us or perceived us as an involved minority shareholder. I think what's important is that we receive 400 projects. I think we passed the 400 yesterday. I was counting the project with Edouard, and now we have 400 after 1 year of business. Of course, not of the 400 are right in the focus of the fund, but I would say that about 100 projects are really significant projects. We met more than 150 entrepreneurs in the last 12 months. The total financing requirement, if I look at the top 40 or top 30 projects of my portfolio, is about 130 million euros. This is why I'm saying that with 25 million euros, I don't have enough money. And last but not least, the average financing requirement per project is about 2.5 million euros. When I started investing in this business 5 years ago, you guys, you startup, would come to me and say, would you have 200 or 500,000 euro for me? So a very small amount of money 5 years ago. Now the amount of money is becoming much more significant. And I think it is the illustration and the proof that this business is becoming more mature, that entrepreneurs are now realizing that you don't go in the business just connecting 2 or 3 guys who want to share a car. I mean, you need technology, you need to invest to build the crowd, to build the number of users to your system. And so this eco-mobility ecosystem is really becoming more and more professional. One of our shareholders left us, but this did not provide us from quote-unquote delivering our proof of success, or proof of concept, I'm sorry. We made 3 investments this summer. We almost died, but we survived, because doing 3 investments together just after 7 months of operation, I can tell you, is a real challenge. One Norwegian company called Moveabout providing B2B car sharing services. A French company named Ziloc Auto providing peer-to-peer car sharing solution. And the third project is a little bit different because it is not a service, but it shows you on the opportunities of investment that you can have different opportunities. It is a product, it's called Easy Wheel, and it is a smart wheel that you can plug on any running devices. It has a battery and it has an engine in it. On the French market, we are the #1 investor on this mobility field. Now, where are we going? Where are we going? Where are we going, and where do I see, what are my beliefs with regard to this market? I touched on the first one. Financing requirements are significant, and they will increase as the market matures. So there is room for investors, there is room for professional investors. Access to financing is not enough. There is a need for scalable testing field, or there is a need for pilot opportunities. And this is where, and I think this was mentioned in the presentation before by the Aeon gentleman, this is where corporate venturing differentiates itself from traditional financing of financial venturing. We provide the financing, but we also provide ground for experimentation In our case, we provide 3 different grounds for experimentation, or 3 different opportunities to get a real business opportunity with one of the 3 sponsors. Profitability. Profitability is a challenge because if startups don't deliver profitability, investors won't come. So my belief is that profitability will come. Profitability will come from the combination of 2 factors. The number 1 factor is size, or what I like to call critical mass. You need to have a sufficient number of users of these different services to make sure that you will be able to deliver and to build the right services to bring profitability. And it will come from consolidation. Today you have too many players on this emerging market. For instance, on the peer-to-peer market, the one we made the investment in, Zilocoto, in France, in 18 months, you had 10 players emerging on the market. In Germany, as far as I can know, I probably not have seen all of them, you had 5 or 6 players. They are not going to survive, all of them, so there is a need for consolidation to come up with 1 strong or 2 strong players per country, and then this strong player might become the European winner. Shared usage of car is what drives this eco-mobility market and with all the technology behind. But shared usage of cars will converge into a unique marketplace which will combine the different offers already existing on the market. Today you still have silos, car sharing B2B, peer-to-peer, you have carpooling, you have taxis on demand, you have all kinds of services to facilitate shared mobility. Tomorrow you will go to a platform and you will be able to have access to the different services. Question is, who will be the integrator? Who will be the integrator of these different services? My guess is that it will be either an existing large transport company like SNCF, for instance, or Deutsche Bahn, or it will be one of these new players on the internet market like Google. It will be either or. My 5th belief. This one is a little bit tricky, a little bit more complex or complicated. My belief is that private cars will become, quote unquote, private public cars, fully integrated to the public transportation network. Why am I saying that? Is that tomorrow, instead of lending your car to an individual, you will be leading your car to a public transport company, and it will be part of a network complementary to a bus, to a subway, to a tramway. This will allow public transportation to make significant economy, and this will allow individuals to get significant benefits. This is not going to come in 3 years, this will come in 5 to 10 years, but it will come sooner than we expect. My 6th belief is that the most valuable mobility is the one that can be avoided. As mobility becomes a scarce resource, we have to think, all of us, of that mobility, those mobility that we can avoid. It doesn't mean that we all have to stay home, connected to a computer, and not go out. This could be possible, as a matter of fact. You could live inside your house, not going out, and have access to all the services you want. But we have to be smarter in the way we approach our mobility. Now, before Jan cuts me off, because I'm 1 minute over time, this is my conclusion. So I think eco-mobility is now a real market. There's a strong ecosystem, and that future development in the market will come from innovation and partnership. And this is what Ecomobility Ventures is really willing to bring to the table, willing to bring to other large corporations who would like to join the panel, who would like to join the project, and of course willing to bring to these new companies that we are very excited to meet, that we are very excited to finance, and hope we can bring them a new approach to financing.
Do you have a question for Fabienne? If yes, please wait for the microphone, and before that, raise your hand.
Yes.
Thomas.
Yes, Thomas Della Santos, Innovative Mobility. When do you expect to raise the funds to 10 times what you have available now?
10 times, please. I would be delighted. No, I think we have a goal to go back to of course, find our fourth industrial sponsor, to go back to the equilibrium of 4 companies, of 4 industrial companies. I think it's difficult for us to have more than 4 industrial companies because the decision-making process is made on a unanimous basis. So it's difficult to align interest of 4 large corporate entities. This is why we're not expecting to be able to have more than 4 or 5 industrial sponsors. Then what we would like to do is to leverage the industrial money and expertise with the equivalent financing coming from institutional, financial, family offices, which will bring the financial power, leveraging the industrial expertise. So the goal for this next round of financing is to reach between 50, 60, 65 million of financing.
Okay, thank you.
My question is, of the 400 companies you have seen, can you say at what stages they are? Concept stage, product development,
Okay,
and maybe completed product. I assume that not many have revenues yet, but some of them may have.
So out of the 400, I can really talk about the, 60% which are really in the scope, because the ones which are not in the scope, we don't have statistics on. I think it's a mix of PowerPoint presentation, 20%, early stage, so somewhere between 0 and 500, 50, 60%, and then the last 20% is above 3-4 million revenues. There's a gap. There's the 0-500, and then there's above the 3 million revenues. In between, not so many. In terms of sector, these 4 items I brought you on the chart, it's more or less balanced between the 4 sectors of the ecomobility ecosystem. And 1/3 of the projects come out from outside of France, which for us is a real, it's great news, because we are not doing any significant efforts to source projects from outside of France, and this project comes spontaneously to our radar screen.
Thank you very much.